Jamie, Steve, what's going on today?
Hey, Scott, thanks a bunch. Hello, everybody. Hello, Steve. What's shaking over there on your coast today?
Just another West Coast Monday, Mr. Jamie.
It is, and as I'm sitting here looking at the date, I'm like, what happened? How's September almost already half over? But here we are. Welcome, everybody, to the September 13th edition of Office Hours.
Wake
I'll
me
be
up
your
when
host.
September ends.
That's a song by, if I'm not mistaken, Green Day.
Billy Joe. Yep.
Yeah, yeah. Okay, so welcome everybody. Hope everybody had a nice, profitable Monday. Before we get into the good stuff, just going to take a moment here to go over the disclaimer and basically let everybody know that all the information that we share with you guys during this webinar or any of the other webinars that we have coming at you on a weekly basis is for educational purposes only. Simply meaning, if you need investment advice, please seek out a registered investment advisor or a Series 7 licensed stockbroker, because those people can legally dispense investment recommendations, buy and sell information, all that good stuff to you. Once again, we're not here to do that. We're just here to share some cool trading ideas with you guys. But if you do need investment advice, please seek out an appropriately licensed individual if you'd like to go down that path. Always like to take a little bit of time at the top of the hour here to let you know about not only do we have the award-winning software scanner that is TI Pro, but we've fostered quite the community around that technology. All kind of starts over here with our trading room, which is hosted by Barry Anderson. Of course, Barry needs no introduction. He's been with us for a very long time. He runs the trading room. He's the moderator. He opens the doors about 30 minutes before every open. The cool thing about our trading room, other than Barry, is that it's free. If you've shopped around the web and looked for different trading rooms that are worth anything, if they are worth their salt, you've noticed that they probably come with a pretty hefty price tag, whereas that is not the case here. Matter of fact, you don't even need a subscription to Trade Ideas to get in there and be a part of the trading room. So traders from every skill set in there, beginner, intermediate, advanced, and just a really good place to learn, especially if you're new. Of course, you're going to get myself on Mondays, and we've changed up the 5 p.m. Eastern webinar circuit just a little bit. We used to do these every week. Now they're going to alternate every other Monday for office hours. And as you can see, Steve takes the wheel on Tuesdays, but it won't be till next Tuesday. He'll have alternating Tuesdays. Dan and Brad are going to switch to alternating Wednesdays, and Andy and myself alternating Thursdays. The daily support session is going to remain in effect every weekday, Monday through Friday, same bad time, same bad channel, 12 p.m. to 1 p.m. Eastern. Still a great place to go and get anything TI related as far as questions go answered there in that webinar. The next slide that I show you will show you how to get there. This URL down here, trade-ideas.com/live, that is static. So once you do get there for the very first time, you can easily bookmark that URL for easy reference in the future. But that's how you get us. That's how you get to the live support session Monday through Friday, 12 p.m. to 1 p.m. Eastern. And speaking of educational resources, TI University, very valuable series, especially if you're brand new to the product. 101 and 201 will get you over that learning curve a lot quicker than not watching these videos. This is a 4-part video series. 101 through 401, you can access these videos from our Trade Ideas YouTube channel. Once you get over there, find the Trade Ideas YouTube channel. You just search for TI University, they'll come right up. And of course, the cool thing about them is you can start them and stop them at your leisure. You know, in case you have something like a job or other responsibilities. You can start and stop. But a great 4-part series, Beginner 101 and 201, ideal, especially if you're new. And then we have 301 and Advanced 401 for the more advanced features like back testing and things of that nature. All right, Steve, I see the questions panel is pretty active already. Let me know if I need to back up and go over anything there.
No, it's good.
And here we are with today's agenda, of course. With today's agenda, of course. Market recap, from what we saw at the end of last week. Things were looking kind of grim, but lo and behold, I don't know if it was the PPT stepping in, the plunge protection team, but we had a nice little gap up. It didn't necessarily hold, and Steve will go into that in just a moment when we look at the overall market action. Compare count window kind of knocked it out of the park today as far as picking market direction. We got the Holly recap. Holly was kind of a mixed bag today, and we'll get to that. Oops. We shall get to that as well. And of course, in any market condition, there are always some decent opening range breaks, and there's some pretty nice specimens out there to both to the long and the short side. Of course, where we are in the markets, there was a little bit more profit potential on the long side, but still some very nice short setups. Then we're going to revisit the window that I handed out a couple of weeks ago. I believe it was, produced on the 30th. That thing's been holding up pretty good. We'll take a look at how it's done since that point in time. And then I've thrown together one for the Nasdaq, which I will let you guys have as well. So some pretty interesting stuff on the docket for today. So Steve, if you're ready to take the baton, I'll kick it over to you. We'll look at this overall market action, and then we'll take it from there.
All right, what I have done, welcome to my desktop here. What I have done is I have zoomed back in time. This was last Wednesday. This is what the close looked like in the S&P SPYs as of last Wednesday. We know that wasn't today, but I'm showing you that this was the moment in time that the market, should have done its normal thing, put in a bottoming tail, close at or above the 10 SMA, and move on its merry way, supported by the Fed and all the buying they're doing of assets. But we didn't get that. We got the very following day a kind of a fake out wick to the upside and a reversal and a close, our first close below the signal 10 SMA. And of course, we talk about the 20 SMA being a backstop. And then on Friday, market gapped up, tried to sucker everybody in, and sold off for the entire day. And we had some joking, around here. Jamie saw it, a few of the guys, they tried to drop that tired joke. Oh, we'll be back at highs by Tuesday. And I reminded them, that joke's getting a little tired, and we did some damage on Friday here, so pay attention. Well, lo and behold, technically that was a gap up. We opened up right here. So 2 days in a row, Friday gap up, tried to sucker the buyers in. Today, Monday gap up, try to sucker the buyers in and sell them off with a red candle for the remainder of the day, only to find the stick save by the end of the day. And if I draw, lines off of this low and that high, there was maybe a technical reason. You could call it a pivot point to bounce, but I firmly believe, and I said to the guys on Friday, we're going to see a test of the rising 50 before we see new all-time highs again. And I'm going to stand by that and timestamp it. So I still think we have a little work to do here. The breakdown is 3 days old now underneath the curling over 10 SMA. And we're in the territory that I affectionately call the armpit, all right? When you're in the armpit, you're guilty until proven innocent. We're still below the 20. We're still below the 10. This is what I call the armpit. Some people call it the pocket. I like to make up my own names. And so until this market can get back above and start to grind higher, back above the 10 SMA, we're going to be under a little pressure here. We'll see how this resolves, but I'm just going to stick to my guns and say that we're probably going to have to test this rising 50-day moving average before we move back up to new highs. It's just a gut feeling. I think we also took a brief look last week at what we would call Rsi Divergence. Let's put the RSI back up on here and show you what I was seeing. Seeing nice defined new highs and the price action moving that way, but for the most part, that's a bit of a bleed there, and we were kind of, trending downward just a little bit. So each new high was being achieved with not as much oomph behind it as indicated by the relative strength RSI. And sometimes that can be kind of an early foreshadowing to corrections. I'm not saying we're going to have a full-blown correction. I just feel like, we still have some work to do here. Pretty good volume on these last 2 red days. I think that for whatever that level is, let's clear that up and find out. This 441.70-ish area, I think, is very much in play. So we'll see what continues to happen on that. But I do believe that we're going to at least test that rising blue line, just like we've done back here and here. Got close on here, but this time I just feel like we really need to at least shake the trees a little bit more and then see what happens, when we do get there. So not exactly bullish, don't have a lot of longs on the line right now, except for my usual investments and holdings in some of these metals. But the Nasdaq, oops, there we go. Nasdaq had a similar day, but a little bit stronger, at least in terms of respecting the rising 20-day. That's where the buyers jumped in, and this has been the leading index for the most part. The big tech has been leading the way. And again, if we go backwards in the time machine a little bit, that day right there probably really should have been a nice one. That day probably could have held, but we didn't. We bled through on Friday with good volume, and we have some more red again today. We'll see what happens over there in NASDAQ land. I think the small caps actually were doing okay for the most part today. They held in there nicely. They didn't get below too many averages, a nice bottoming tail after a big move last week. So probably not too bad in over the counter, but I'm watching the bellwether S&P 500, which has all the energy, all the financials, all the tech. It's not really leaning one way or the other, to see if we can get out from underneath of this armpit. This area right here needs to be resolved. And I just kind of feel like, it might have a date with that 50 before the buyers really take a stand. And if it does happen where the 50 doesn't hold and we bleed below and close below that, well, I would present to you, we haven't really done that very often. We did one day back here and it was quite the fake out. I remember that day. I got leaned short a little bit and had to cover. But here, a nice bounce in the close, didn't even touch it on here. But if we do roll over and close below that rising 50, and I've said it before, this market has come a long way and it feels a little tired, especially when we look at the market breadth. There's only a few big names that are kind of driving the markets higher. A lot of individual names are still below their 50-day moving average. And so if that can't resolve itself, the air gets a little thin up here. And if we get a big close below that, declining 50, then be very careful about what you're holding on to out there, because when people decide they do want to run for the exits, they don't give you a lot of time to figure it out. So we're in no man's land. We'll see how that resolves this week. I'm going to say it again. I believe like we're going to test that rising 50 before we put in any new all-time highs, if that's even going to be the case. All right, guys, that's all I got for you on that.
Good stuff, Steve. And you know what? I tend to agree with you. I think there are no guarantees, but I think
you've been around too long not to, Jamie. You've seen how markets typically behave when we start to get a weakness in thin air.
Yep. And then, look at that gap. It just ate it right up today like melted butter. So thank you for that. Let me grab, did I grab it already?
Yes.
I think I am. Okay. Yeah. Good deal. Okay. Hello. All right. So on with the show here. Compare count window, pretty much nailed it today. For those of you who attend on the regulars, you know what I'm talking about. If you're new to this webinar, we have this guy right here. If I go to new and I kind of cruise up here to the top, you can spawn a new compare count window and basically make it keep count of, well, whatever it is that you want to. This window is looking at any company with a market cap of 4 billion or higher. And I'm just taking a peek after the first 15 minutes at those stocks with a market cap of 4 billion or higher. They're hitting highs and lows in the first 15 minutes. So the reading that you're seeing right here is taken right at the 15-minute mark. So we had 67% selling bias, which is pretty significant. Typically, I like to see, if I'm going to pay attention to, one bias or the other, regardless of whether it's up or down, I'd like to see those numbers above 55%. 55% is still kind of marginal, but once you start creeping into the 60 percentile range, it seems like those readings seem to have more weight or merit. And of course, after the first 15 minutes today, we saw a nice juicy 67% to the downside. So let's take a look here. These are 5-minute candles that we're looking at here on the SPY. So I go 1, 2, 3. Here is the area right here. And you can see a little bit of wiggle for the following 15 minutes, but then the gap proceeded to be completely eaten up. So that was a nice heads up on which way to go from the compare count window today on the big cap. So Always good when that works. And Holly was kind of a mixed bag today. 13 total signals, a little bit of conservative moderate spread to be had. And for those of you who might be new, I'll explain what that is in just a second. 3 candidates in there, VLO, LYB, ATER. Sometimes there are some decent trade arounds presented, which is when the AI gets stopped out and we kind of observe how the stock acts around that stop area. Does it blast right through it? Does that stop area act as a pivot point for a potential trade around on something that the AI got stopped out of? And then sometimes there are nice add-on opportunities in some of the unfolding AI trades. A little bit of that in VLO today. So everybody can see I've got the AI blotter pulled up here. Also got the strategies tab open as well, or the strategies window. If you watch me cycle through here, now keep in mind all the values that you're seeing on my screen are based around risking $100 per trade. That's why you're seeing the stop out values here, right about $100 on the ones that did get stopped out. But kind of gonna focus over here and just kind of cycle through the different risk modules here. Conservative profit, risking $100, you're down about $350, not counting slippage and commission. Moderate risk mode, all right, which basically is just putting a stop in and the trade either works or it doesn't. Just a little bit worse than a scratch, down $38.61. If you're just throwing caution to the wind to getting into the AI trades and seeing what happens, well, you made money today, but you're taking a lot of risk, okay? So notice I've got my blotter up here sorted by the moderate profit column. We can see over here, conservative, moderate, all right? And of course, aggressive too, if you want to see that. So what we're looking for here is a larger number at the close and moderate versus conservative. Of course, as the market is unfolding, we don't know that this number is going to be bigger. All we know is that the AI, for one reason or another, is closing out the trade in, oh, give me my column doesn't want to resize there. Okay, we're going to get the reason for the conservative exit here. So let's take a peek here at the ATER. Kind of a crowded screen here on this one. Let me switch to 15-minute candles. Be a little easier on the eye. Okay. Okay, so here we can see the AI calling the shot here at the entry price, coinciding with the blue line, 1551. That's also the price you're going to see here. And the shaded area is the time that the AI spent in conservative mode before it exited in a profit save, okay? So not really a whole lot of volatility in there. If we did shrink this back down to the 5-minute candles, it might become a little clearer, but the bottom line is the AI was like, hey, gonna go ahead and take my profit here. So risking $100, almost a 1-for-1 risk to reward ratio, just coming in slightly less than $100. However, if we would have ignored the AI's exit and just said, you know what, we're gonna stay in this trade, by the close, we would have made roughly double the amount as the AI made in conservative mode. Even had a little bit more profit potential up there, but you know, trying to top tick in that time frame, probably not the most realistic, but nonetheless, a decent spread between conservative and moderate, and a good way to get used to this process, right? We never know if they're going to hold up. You know, we can look at what's going on the intraday and perhaps the daily and go, you know what, this thing looks good. I'm going to stick with it. I'm going to ignore the AI's exit and manage my risk accordingly. So, you know, a couple of ways to go about that. If you see the AI, if you're in a trade with the AI and you see it making a conservative exit, taking a little bit of do-re-mi off the table, you can peel out a half your position, keep the other half for a risk on, okay? Now, looking at the ATER, very simplistic way to do it is take half off the table with Holly, keep the other half, keep your original stop, or in the case of ATER, you could have set that second stop to break even. That way, if it does roll back over, stop you out, you still made money on the first lot. This one would have kept you in all day with a break even stop, came really close, and that little candle there didn't quite do it. So nice little performer there in ATER. All right, moving right along, big O difference in the VLO spread. And of course, VLO, Valero Energy, it's not at all uncommon when the market is cycling down to see oil run contrary. Some of the oil servicer stocks, as in the case of VLO today, a little bit stark of a little bit more stark of a contrast here. AI pretty much flatted the trade, as we can see right here. Big wick to the upside, big wick to the downside. Guess the AI just got a little bit nervous and pretty much flatted the trade right where it, entered for a perfect flat of 0.00. Now, yeah, a little wick to the upside, a little wick to the downside, but still not getting anywhere near our hard stop, and that's why we have stops. If we're wrong on the bet, that's what we're willing to take as a loss. Not really coming anywhere near that. So once we get this second wick down here, probably a pretty good sign to stick with the trade. And had we done that as soon as Holly closed it, next 30 minutes is where it started, moving on to the upside. Peaked out up here. Keep in mind, this is the close here. A little bit more profit potential than what we see in the moderate column intraday. But even if you just held all the way to the close, big difference between making $0 and knocking out just a little bit over 1R, risking $100 and making 112.84, holding to the close. Now we got a tiny little bit of spread here in the CEPU. Pretty boring activity, so not really worth breaking down that one. LYB, not bad, only making half R, holding that to the close. Another flat from the AI, right in this little area right here. A little severe downturn there, but still not getting anywhere close to the stop area that we see down here. Just kind of a boring little chart there, but nonetheless, some decent spread between conservative and moderate there of about half R. Other than that, not a whole lot more spread between conservative and moderate, which kind of brings us to the next little topic here, trade arounds, okay? Typically, when we see the AI get stopped out, if we focus now on these columns down here, at first glance, KTOS looks like it would have been a great trade around because it got stopped out, but look at aggressive profit now. You get stopped out for 100. If you would have held to the close, you're up 144 instead of losing 100. But when we look at the chart here, I think everybody's going to see what I might be referencing here. Okay. So 15-minute candles here, buy signal coming at the top of this candle, coming in about an hour and 15 in. Just kind of chop around before boom, 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 just stair step right down to the stop area here. And how did the stock react around that stop area? Well, it looked kind of good for a moment. Looked like it was going to kind of hit here and maybe go back up, but nope, gets really far below that stop area. So typically, if I'm watching the AI on something that got stopped out, I want it to, I want that pivot area or that stop area to act as a pivot for springboard up. That was not the case here, okay? Now you could say, well, could have always set a price alert in case it gets back up there, but typically if they go this far down, a lot of the times they never see the light of day. This is kind of an anomaly here when they get that far down. Of course, could take a look at the daily here, and not a lot to see there as well, kind of getting right down into the middle of those other candles, getting through there. But a nice wick back up nonetheless. But typically, if it's going to be a decent trade around, we're going to see that stop level hold, maybe a little bit of penetration through it. But when I see them go that far for an hour, typically I just write them off. This one came back. Wow, went on quite a run. 1, 2, 3, 4, 5, 6, 7, 8. For the last 2 hours, it just did nothing but go straight up. That's the anomaly. That's not typical what happens there. So not really any good trade around candidates. As far as adding on to any positions, VLO was marginal. Let's pull it back up here. And I tell you what, to get a little bit more detail, I'm just going to shift back to 5 on this one. Okay, so we were already in the trade here with the AI. We take a nice little pop up, nice little regression down, even on the 5-minute, nice little 10-period catch there, not coming anywhere close to the stop area. But then as we get up into this area right here, we go on this little 20-minute consolidation before breaking that upper range, that opening range break. So that would have been a great place to tack on a little bit more VLO. Plenty of time to see what it did. Sellers tried to take control but could not. Back up here, a little consolidation dance before making a nice tight break out of that range there. So as far as add-ons go, the only really quality candidate that I saw today was in the VLO. Could have tacked on some right here, enjoyed the majority of the gain for the remainder of the day. All right, and I do believe that is it for the Holly highlights. I mean, other than that, you can see what went on here. Quite a few stop outs today. No trade arounds, a little bit of add-on opportunity, and a teensy weensy little bit of conservative and moderate spread in 3 of the trades. All right, now, Bud, I almost forgot about that one. When I say minimal here, okay, and I think who was talking about Bud up there? Yeah, Nasio. Okay, so notice what Bud did. Bud was also a stop hit. Got stopped out for 100, but by the end of the day, only losing about $37 on that. So notice the difference here between Katos and what Bud did. Bud came down here, tickled the stop area, spent about 10 minutes just, let's see, 58.10, 5 cents below that stop area before reclaiming it. So coming up through this level right here, could have told yourself, well, that's 5 cents. We're going back up above it now. Going to put a trade on around 58.16. Not a whole lot of profit potential in there. You know, the tops of these candles at the close, 58.48. So only about 30 cents of potential in there. But still, it fits the mold of the typical trade around from seeing stop out from the AI. Now, to your question there, Nasio, what was the Bud trade was so big in terms of dollars? Well, it was a relatively, let's see, we had a buy up here at 58.61. It was a 50, roughly speaking, a 50-cent stop. Let's see, roughly speaking. So that is why the AI sized the share size appropriately there, okay? Risking $100, if we lost 50 cents, that would be right about $100 on a little over 200 shares. So hopefully that clears that up for you. All right, and as always, up market, down market, sideways market, you know, not so sideways market, there are always plenty of opening range breaks on the intraday time frame. They're kind of like the rabbits of the forest. There's a lot of them, a lot more of those animals typically than any other ones. So we're going to take a look at some of those today. I'm going to show you the windows that I use to find these things, which are these guys right here. 2 of my favorite windows, turbo breaks up and down with a relative volume requirement of 3x. Relatively simple configuration here. 3x on the relative volume. Stock had to have traded at least 100,000. That helps us keep the garbage out, wide spreads, and the more thinly traded ones. And don't worry, I'm going to drop all of these windows along with the other windows that I showcase at the end of the presentation here as well. So I'll make sure that everybody gets those in the chat panel. So just a quick word about an opening range break, or what we might refer to as an ORB, opening range break. We do have a suite of alerts for these things, which you can easily access. You can see we have everything from the 1 minute to the 60-minute, okay? But the cool thing about these guys is they can occur at any time of the day. It depends on how long the stock moves sideways, okay? So that's why I'm using new high in this window and new low in this window, because a stock cannot break an opening range to the upside without hitting a new high, and it cannot break one to the downside without hitting a new low. So that's what these windows are doing for us. Does it mean that each and every symbol that comes through here is going to be a quality range break? No, but it's meeting the criteria that I like to see. So pattern is what I like to refer to as secondary here. We know all the symbols coming through here are going to meet the filter criteria, meaning high volume and hitting a high, but then is the timing appropriate? Okay, so I tell you what, there wasn't near as much profit potential in the downside version, so let's do the less exciting ones first. First one, and I tell you what, we'll save that one for second. Okay, this is like classic textbook. Okay, it's not perfect, but it's a really nice specimen. Okay, this one occurring about 3 hours into the market. Market opens at 8:30 my time. This one occurred at 11:25, just 5 minutes shy of the 3-hour mark, which is way beyond our 60-minute, which is the top of our range in the pre-canned alerts that we have, right? But we can see here, I'm just going to push this line up here, put in its high and its low pretty much right off the bat, and then started going sideways in a much tighter range, okay? A little volatile in these crazy big bars, gets nice and tight, starts to come down here, and then boom, at 11:25, blue arrow, we get that break to the downside. So simply shorting it right here. How do we assess our risk? Well, these being 5-minute candles, not including the entry candle, we're going to go back 3 5-minute candles for a 15-minute previous high. 1, 2, 3. So I could just stick my risk right there. You can see that this is my risk area, and then this is my reward area. Okay, we always want at least a 1-for-1 on risk versus reward. And on this one, I could probably fit that risk in there maybe 2 times. It'd be a tight squeeze, but I think it just about 2R at the bottom here. So a nice short signal here, a nice crisp range break coming out at, we'll just call it 2029 and 1948 is where we bottomed out there. So not quite a point, but nice risk to reward ratio nonetheless. Now notice how tight and pretty this one is, okay? But these come in all shapes and sizes. Let's go back to Loma. A little bit different, okay? Not near as tight, okay? So if I push this line back up here, that is the opening range. Now this one, a little bit more energy expenditure before we get to that breakdown level, but the pattern is the pattern. Once again, I'm just gonna flip back to BMA. Nice and tight. Still a little bit of about 10 minutes of energy expenditure, but acceptable risk. And now when we go back to Loma, just a less attractive pattern, not near as tight. So, you know, when you're looking at these things, obviously the tighter the range before the break to the up or downside, the better. But just goes to show you it works nonetheless, even in this scenario. So the bottom line is, if you see something like this, here's the entry candle, 1, 2, 3. If you're comfortable with the risk being, well, 1, 2, 3, right there, right? Which we're looking at 769 here and 785. So a 16-cent risk on a almost $8 stock. If you're comfortable with that, you put this trade on, you got rewarded nicely. Okay. Once again, reward area in this little quadrant here, from this line down to here, and a nice tight risk area up here. So the signal coming here right about the 769 area, capitulating down here to 725 or so. So on a $7 stock, not a bad percentage gain. Very nice risk to reward ratio on Loma as well. I do believe the last example I have to the downside, a nice one as well. Very pretty, so to speak, okay? Law, gap down, sellers clearly in control, boom, boom, boom. A lot of energy expenditure, but hey, what do we have right here? I mean, that consolidation is tight enough to level your house on. A little bit of energy expenditure on the 5-minute candle here, but 55, we'll just call it 56 here, a little over a point risk. So the break coming right here at 56, and this stock bottomed out almost at 52. So we'll just call it about $3.60 of reward here, and you were only risking a little over a point. So very attractive on the risk to reward ratio as well, the best short of the three that we just looked at. So once again, this is textbook, okay? Nice tight area. We can see the range break occur. Right up here is our risk area, nice juicy reward area. Of course, if you didn't take the cookies, well, the plate was coming around and you got greedy, all that money evaporated. But this was typical today on a lot of these things that we're breaking down to the low side. All right, Steve, let me know if I need to back up on any questions. Looks like you're keeping it under control over there. Little time check here. And now let's take a look at some of the upside range breaks, which were pretty juicy today as well. Boy, RDWR. Notice what we have going on here. 5-10 minutes, it puts in its high. The low's already been put in. Look at that nice, beautiful little consolidation area right here. I mean, textbook, okay? Blue arrow, that's where we get the alert. Right about the 35.88 level. Doesn't even act like it's going to come down here and test the stop, which was so minuscule here. I failed to mark it up, but you can see how small the risk area was. So clean, it just went sideways for another 20 minutes and just stair-stepped up. Of course, probably would have been tempted to take some off the table here. Notice the red line that we're seeing right here, okay? The red line is associated with using the new high alert. That's the system telling us this could be the next area of short-term supply. And guess what? It did spend quite a bit of time there right at that level. So, you know, 35.88, we're up here at 36.55. Not a bad move, but boy, this thing went blotto late in the day. Would have been nice to have gotten some out here. If you didn't get some out in that 10-minute area, I mean, you still had plenty of time to get out up here, and then boom, here we are right back to that area of short-term supply. But that one sure did give a lot. Now, what I failed to do on the shorts, and of course it would look the same, is check out all the volume levels here. Okay, so we're playing a very simple pattern that is pretty easy to grasp. When we have big volume on our side, it increases the odds. It certainly doesn't guarantee, but the more fuel we have in that tank, the better when we're playing these things. So finishing almost 14x on the relative volume scale today, and that's what we're looking for. Next one on the list, AVDL. Nice upside action, very reminiscent of what we saw on the short. If you didn't take the money while the plate was going around, same thing happens to these, even though, you know, we were vacillating up for the, you know, for the in period of the day. But it just seems like, you know, these things get up, they get down. You better play your cards right. You better be taking profit on the way up and protecting what you got, because if you just sit there and get greedy, a lot of times it can disappear, not only on the downside on a short, but also to the upside. Of course, this stock a little bit thinner, but kicking out some pretty impressive volume today. Traded a little over 1 million shares, finished at a relative volume of a little over 5. A little bit spottier on the intraday, but the pattern is the pattern nonetheless. A little bit of volatility here before it tightened up, getting into the 11 o'clock Eastern time zone. Puts in a nice little candle there, breaks this opening range. Little consolidation up, little consolidation up, but the bottom line is at a very small risk area. Entry right about 801. This thing topping out right about 840, so 40 cents on an $8 stock. Not a bad percentage gain and a really, really nice risk to reward ratio. You know, that risk area was so tight, you can barely even draw anything in between there. So really nice upside mover on AVDL, but if you didn't take the money, boom, it all went away. Not quickly, but went away nonetheless. All right, the last upside example gonna look very similar. And there were a lot more of these today. These are just some of the ones that I'm choosing to showcase because of the pristine nature of the pattern, but there were a lot more pristine ones out there that we're not going to get to today. So once again, classic textbook. You know, we got the high and the low being established early on in the first 10 minutes of trading. We get the sideways consolidation, nice small energy expenditure before the range is broken. This one going off about 32.72. And boy, if they could only all be like this. I mean, this thing just off to the races, doesn't even throw any elbows or wiggles. Of course, our risk would have been right about here, not including the entry candle, 5, 10, 15. So once again, just an extremely tiny risk area, and this thing never even looked back. So what do we got here? 32.74. And if we just look up here, 35.65 all day. Okay, so really, really nice risk to reward ratio on Rsi. How is the volume in Rsi today? Well, a little over 4 on the relative scale. Boom, boom, boom. Just a beautiful chart, beautiful movement. This one did not give it back. So hopefully, you know, that makes sense to everybody. If you have any questions on how to identify those things, let me know, and I'll make sure that I drop these two windows into the chat panel before we're done. So let me clear my scribblings there. And now we're going to revisit the window that I distributed last Monday, which was, I believe that was the 30th. The top 20 weighted symbols of the SPY. The back test has been holding up. The performance has been holding up. So let's take a peek at that one. And then what I did is I took the same theory and applied it to the top 20 weighted Nasdaq, and we got good results. We didn't get quite as good as the S&P, but you'll see here in just a moment. I can quit covering my windows up there. All right, so the question that I see coming in there, JJ, how did I find Rsi? Okay, well, real quick here, it came through this window here. All right, this is the window that I look for my opening range breaks. And as I was stating earlier, once we see the high put in right here on the opening 5-minute candle, and then the low put in here, notice how this thing goes range bound. Notice the orange line here, okay? That's the range that it has to break in order for an opening range break to be satisfied. So see the blue arrow there? That's right when Rsi came through the window that you're looking at right here. Turbo breaks up. It was hitting a new high. It just happened to be perfect timing with that opening range break. So I found that stock with turbo breaks up, looking at stocks hitting new high, doing a minimum of 3 times relative volume, and that's how I found the Rsi today. And yes, I will make sure I drop these windows into the chat panel before we are done. But we got a couple more windows to take a peek at here, which I'm also going to share. All right, so let's get the back test kicked into gear here. Once again, this is the top 20 weighted components of the SPY. It's pointed to a custom list, which will show up automatically for you guys. You don't have to fiddle with finding, and you don't have to fiddle with making the list, since I put it on a universal symbol list. These are geared for a hold time intraday of 90 minutes or an hour and a half. Not attaching any profit targets or stop losses on this one. And we're back testing the past 40 trading days. Shouldn't take too long here. Okay, let's make sure I got all my numbers. We're looking on this test, just throwing 3 grand into each trade, getting as many shares as we can with 3,000. We can see pretty nice spread here, keeping in mind that these are the top 20 S&P components. So you don't have to worry about liquidity. You don't have to worry about huge spreads. Maybe on the open, things can get a little bit out of whack, but these are some of the most, the top 20 capitalized stocks of the S&P, and you're going to recognize all the names, obviously. But we got a decent spread here between winner and loser. We've got a really great projected monthly. We've got just something on the annual that's a little too hard to believe here, but this is what we look for in a back test because things can change, markets can change, so forth and so on. But this is definitely encouraging. Now, when we take a look at the daily, past 40 trading days, not looking too bad. Here, this candle right, or this bar right here, this was the day that this strategy was created and then distributed to you guys on the last office hours. So it has not been knocking it out of the park, but it's held up relatively well, okay? So I'm gonna continue to watch this one. These days look, like this red day right here just looks like it's falling into conformity with what we see down here, right? Still, most winning days in a row, 8. Most losing days in a row, 2. On $3,000 a trade, our biggest winning day is still 2x our biggest losing day. So 200 bucks on the best winning day, 89 on the biggest losing day. These numbers, you're not going to lose any sleep over these numbers. And when we look at the things that are being traded, if we go to the calendar here, only had one trade last Friday, which is fine. PG, Procter & Gamble, made a whopping 21 cents. But hey, a winner is a winner. On last Thursday, we had a few more trades. And of course, big behemoths, Procter & Gamble, JP Morgan, BAC, and of course, the mighty Apple. So keep in mind, these numbers here are based around $3,000 a trade. You can extrapolate, you can bump it up, bump it down according to your risk tolerance. But these are just good old solid numbers. We're not knocking it out of the park, but what we're looking for here is some consistency. So it continues to hold up. Let's take a look on that day where it did lose. On the losing day on the 8th, got beat up a little bit, but only to the tune of about 50 bucks. Okay. From the time that we started watching this, 1, 2, 3, 4, all the winning days cover this up with a little bit something left over. And of course, as we were looking at the markets earlier, hasn't been the most conducive upside market. So if the market does find some purchase, whether we bounce from this low of today or whether we come back down here and test the 50 period and then put it on, of course, we don't know that that's going to happen. But unless things really change fundamentally, I think this thing is going to continue to produce. So once again, I like it because of what we see here and the fact that it's all extremely mega cap stocks with very familiar liquid names. So I'll be sure I drop that into the chat panel. So I kind of took the same idea and applied it to Nasdaq. All right, let me make sure that this is pointed to the universal list before I get all busy with this. Okay. I see that is my personal list. So what I need to do is come in here. I put a T in front of it. Okay, so it's there already. I just need to make sure this one is checked and that one is unchecked. Okay, there we go. Now we got the weighted version, but you know what I'm gonna have to do here? I'm gonna have to swap out that link because I gave you the wrong. Let me just replace this link because I've got it in a Word document. I don't want to spit out the wrong link to you guys. Let me just make that adjustment before we take a peek here. I'm glad I caught that. All right. So for NASDAQ, same song and dance, just leaving it wide open as far as the time to take trades, geared for a 90-minute hold time. And we're going to be looking at the past 40 days. So what's interesting here, not as much money to be had in these stocks and a little bit higher priced on the securities because, well, all those tech stocks, those weighty tech stocks are not exactly your lower priced, but we still get a decent back test here. Okay, so green, but not quite as juicy as what we saw on the Nasdaq. Looks like I need to adjust my buying power here just to get a decent estimate. Okay, so check out the average winner and loser. That's just due to the nature of the stocks that make up the top 20 weighted in the Nasdaq. Not bad on the daily, not near as big of, not as many green days as we saw on the SPY. Kind of very similar on the losing days, but a nice run here as far as most winning days in a row 7, most losing days in a row 2. Here's where it gets a little tricky. Biggest winning day, just not quite as much as I would like to see. Typically like to see it 2 for 1 there. But once again, this is very open for optimization. So whereas on the SPY version here, let's see, where'd I put that? Well, on the SPY version, the optimization is very minimal. Same thing on this one too. All right, so let's just go back into the SPY config real quick here. This was the only optimizing that I did, the S&P change, right? That's it as far as optimization with a little cap on maximum price. Well, on the Nasdaq version, since we're looking at the Nasdaq, we're going to optimize by Nasdaq change. But check out the prices. From what I gathered, it's the higher price stocks that are contributing to the gains here with fractional share trading and zero commission environment. Whereas before these bigger stocks might have been off the table, but not so much anymore with fractional trading and commissionless trading. I did throw a little bit of RSI on the daily in here, but that's pretty much all the filters that are being used here, and not a bad thing to keep your eyes on here. So once again, not a bad run, winning and losing days. All of these stocks are going to be mega caps. You're going to recognize all the names of them. Facebook, Nvidia, Adobe, Tesla, all the usual suspects, okay? Now, you might have tried to scalp these things in the past, which is not exactly what I would term easy, if not downright way advanced hard, okay? But when you're bringing a little statistical viability to the equation, well, kind of puts these things on my radar again, whereas before I wouldn't have really cared to have traded them. So between the top 20 weighted Nasdaq and the top 20 weighted SPY, you should have some pretty decent candidates. Of course, pay attention to market breadth, pay attention to what the market's doing. If the market's tanking, obviously we don't want to pile into a bunch of longs blindly. Now, one thing to point out before I drop these in the chat panel and wrap up the webinar here, I would highly encourage you, because this is just one optimization. Once you get this window and you save it, come in here, remove the price requirements, remove the Nasdaq change, remove the daily RSI, run a new back test. Go in there and see what you can do, see how you can optimize these strategies, because you might be able to do a better job than me. But I really like what's going on in the SPY version. I think there's probably some improvement to be done on the Nasdaq, but you never know until you roll up your sleeves, get in there, and start hitting some back tests there. So having said that, I'm now going to drop all of these links into the chat panel. So there they are. Should have all 4 of those. And looks like we're butting up to the top of the hour here. So Scott, it is that time where you can let everybody know how they can save a little bit of money on a new sub, or if they're already a sub and want to upgrade to premium, they can also save money.
All right, I think my mute button stopped fighting me.
All right, good deal.
Yeah, a couple things on the way out. Grab this Favorite Strategy Indicators ebook. It's written by Dave May, who's our Director of Software Development, and he developed Holly and our backtesting module and a bunch of other goodies built into Trade Ideas. Just go to tradeIdeas.com/strategy and see how he uses our indicators in his trading. He also has some links in there that you can import into your layouts. There's a code that'll save you money on an upgrade or a new subscription. Holly Rocks, use it this month. Save 15% off your first month or year of Trade Ideas or an upgrade. And if you need any help, email us at info@trade-ideas.com. That goes to our help desk software and gets you the help you need. You can also find Jamie on Twitter at QuantBot. Steve Gomez is at TISteveG. You can also find @Trade Ideas. Trade Ideas Pro is the Facebook handle. And the recording of this webinar will be up later on tonight or tomorrow. You get an email reminder tomorrow with a reminder about how to find the playlist it is located on in YouTube with a link. So thank you, everyone. Thank you, Jamie and Steve. Have a nice rest of your day.
Thanks, Scott. Thanks, everybody, for attending. Thank you, Steve. We'll see you guys tomorrow.
See you next time.
Bye-bye.